Homeownership was always considered to be part of the American dream, but for many people today, that dream has turned into a nightmare. That's because the impending housing crisis will lead to the home equity of millions of Americans being destroyed. The ordinary American household is finding it difficult to keep up with mortgage rates, which are close to 8%. Many of them are even losing their properties as they fall behind on their mortgage loans, according to research from credit analytics company TransUnion. In addition, many major cities are already experiencing double-digit quarterly declines due to buyers being priced out and sellers cutting their prices in an effort to sell their properties before the end of 2023. San Francisco, for example, saw a 15% decline in home prices in the third quarter, while Seattle and Austin reported 12% and 11% drops, respectively. The warning signs of impending house collapse are getting stronger. The U.S. housing market has shown significant distress over the last few weeks, which has experts concerned about the future. The market is beginning to crack, according to Fortune, but Wells Fargo experts forecast a real estate crisis as a result of rising mortgage rates. To put it plainly, many Americans are no longer able to afford to buy a new home due to the high cost of the property and the increased interest payments. Sellers are currently lowering their listing prices as a result. According to Redfin's most recent housing market report, the price of about 1 in 15 properties listed for sale in the United States dropped during the previous quarter. This is a startlingly high rate when compared to the same time last year. More than 1 in 10 houses purchased in the last year are worth less than the owners owe on their mortgage, which exacerbates the situation. According to a recent research published by real estate data company Black Knight, this is the case. Since the beginning of 2023, the percentage of borrowers who borrowed to purchase homes in 2022 who now owe more than the properties are worth has increased to almost 11%. Furthermore, of all the buyers who bought a property in the first 11 months of 2023, more than 1 in 4 have properties that are worth less than the loans against them. This means that they are in default on their mortgages and face the possibility of facing foreclosure. That is a really concerning turn of events. Growing rates of delinquency are a sign that things may become even more chaotic because foreclosure is a real possibility if a mortgage payment is past due by more than 90 days. It is feared that in December, foreclosures may affect hundreds of thousands of Americans. The credit crisis may also be a significant factor, since rising borrowing costs may make homes even less affordable. More credit restrictions may affect the pool of possible buyers and slow down the sales of real estate. Global economic events can also have an impact on local real estate markets by influencing investor attitudes and confidence. Examples of these events include the current geopolitical wars, China's economic crisis, and worldwide food shortages. In the end, the fortune that many diligent families worked decades to accumulate will be destroyed by the impending housing crisis. The most depressing aspect of this issue is that we can already watch the train catastrophe occurring in slow motion right in front of our eyes. However, the federal government and the Federal Reserve will continue to permit it to occur. They won't be able to halt the economic damage brought on by the trillions of printed dollars they have poured into the system since 2020, until they seize the equity held by the lowest 90% of Americans. In a recent study, the National Low-Income Housing Coalition discovered that there is a national deficit of 7.3 million rental properties that are both cheap and accessible for tenants with extremely low incomes. This refers to Americans whose income is 30% less than the median and at or below the federal poverty level. Remember, that's only applicable to people who live in abject poverty. In a broader sense, Realtor.com discovered a 6.5 million shortfall of single-family houses overall, which is marginally better than its findings. That's even with a minor price decline in the second half of 2022. As Ramsey noted during the live stream, there were 55 million prime buyers in 2008, as opposed to 66 million prime buyers today. In 2006, the ratio was 26.9%, And this makes us worried about the current situation. In other words, it now takes $600 or 41% more to make the monthly payment for a 30-year-old mortgage on the average priced home after putting 20% down compared with a year ago. So that predicts less buyer demand and crashing prices, especially amidst higher interest rates, pushing many prospective buyers to the sidelines. Mortgage companies are laying off employees already, and many economists, including those at Vanguard, predict a recession in 2023, as the country's housing sector is initiating an economic slowdown. Buyers are postponing their purchases to let the mortgage prices come down. Thus, the demand is low for homes and is simultaneously pushing down the prices. On the other hand, the supply of homes is also low, as many owners feel trapped in their current residences because they are left with low mortgage rates. This makes things difficult for both buyers and sellers. Can you see the domino effect creating a chain of crises affecting the country's economy? Therefore, a recession is more likely in 2023. Thus, homeowners who want to sell should not lose hope. On the one hand, the days of getting hundreds of unseen offers in a single weekend are long gone. It was a brief moment in time when everyone sat around in their home, becoming obese and deciding they wanted to move out. There was a scarcity of lumber, which increased 3 times before declining again, and builders are currently not meeting building codes. They are slowing down and making the shortage worse. There is a set of policies that the government and the central banks adopt in dire situations like this. During uncertain times like this, the government offers measures to stabilize the economy. To stabilize the housing sector, the government may implement rate adjustments, tax incentives for home buyers, or programs to support distressed homeowners. Central banks can influence borrowing costs through adjustments in interest rates. Lowering interest rates can encourage borrowing and thus drive demand during a market downturn. Also, the government may introduce assistance programs for those who are distressed due to the fall in housing prices. This may include loan modifications, mortgage forbearance, or financial counseling. Do buyers benefit from this crisis? As we say, every cloud has a silver lining. Every challenge can be turned into an opportunity. For potential buyers, a market downturn offers the chance to purchase a home at a low price, potentially increasing affordability. This downturn can be an opportunity for many home buyers, especially first-time buyers. First-time buyers can particularly benefit from incentives and favorable conditions during a market downturn, making homeownership more attainable. In conclusion, the fall in home prices will be damaging for exposed communities and may lead to destructive periods for real estate. On the other hand, it may benefit potential home buyers, but at the same time, can lead to negative home equity and a potential mortgage crisis. So, some people may benefit from this crisis and others are adversely affected. That's all for now. What do you think of the housing crisis in the U.S.? Let us know in the comments below. Thanks for watching, and for more videos, subscribe to this channel.